to be off the table. And then, I read some articles this morning where people sensed that that was a bigger deal than originally cited, because the market had really sunk its teeth into that the ultimate dovish act would be the yield curve control. But it still doesn't take us out of the situation that the central banks have created. We're not in any way, shape, or form. They still own this market. They still have to, and again, I will look for areas until the Fed stops being a social justice organization, and it's a social justice organization. They're paying lip service to inflation, but my question still stands. 9% unemployment with 6% annualized rate of inflation. Do you think the Fed would raise rates? And if you don't think the Fed will raise rates, then all the other conversation is moot as far as the big picture. What will trade in between that, like today? I mean, there's nothing but opportunities. Even it was interesting that Asia bought the gold last night. They took it up to in the Indices to 1962, and it was a pretty sustained buy. And then Europe came in; they were sellers in the 4 or 5 o'clock in the morning my time period, because I watched it. And then they had a little bit of a rally after the through the jobless claims number. And then they couldn't hold that rally. So now we're back and we're testing that. I think it's now become a very big area. That 1931 area is a very important area. So let's see what it does. But I have been amazed, and I don't know if you were on, that the silver has sustained itself pretty well in the face of all this, especially that it's had the most vibrant rally this month, or over the last 3 weeks, let's say 3.5 weeks. But I think, as I said to Judd, and who was ever on this morning, that's, I think, an anticipation that you're going to see an inordinately large delivery or tenders for delivery for SEP Silver, which begins next. First notice date is probably August 30th. I could be wrong. I don't have my calendar in front of me, but I'm sure it's in that area.
Well, ironically, I had a seasonality that coming in literally this week that means the gold outperforms the broad stock indices essentially globally for 6 weeks. So I actually don't think gold will go anywhere but up and down for about 2 months. So anyone who loves gold, just stay away and just buy the dip or sell the rally. But I think the stocks will just go down against it as it goes on for the next 6 weeks. That's how I'm going to play it. Yep. I think gold will go down that much, because I think everyone knows that gold's ultimately going to be the end winner. But I don't think you're going to make much money in the next 6 to 8 weeks, maybe 3 months, assuming gold outright will go up. But as a owning it as a hedge against stocks going down, I think you will make money if you don't trade the gold leg. Does that make sense?
Yeah, listen. I'm a big believer in mean reversion. The markets run hard, and then they either go sideways and just grind for a while, which is, I think, basically what you're saying. So we'll find the range that it'll settle in.
Yeah. But I think if we get some of these currencies to get the dollar stronger, I think we spoke about it yesterday. I mean, the Kiwi's already done an ROL in a week. If Aussie goes down 20 more points, we get another ROL weekly against some 2 big numbers that Judd had on the matrix. That's not something that's good for asset markets normally. If that closes on Friday, I mean.
Yeah, no, no. Listen, this is good. This is really healthy market action. I know if you're long, it's not, but that's why, well, this room is basically a trading room, not, we could look at investments, on a wider time frame, but I think there's traders there, and that's really what we're focusing on.
Stan, you still here? Can you give me the what did you like, Andrew? The Singapore Nikkei futures.
Well, when I sold some more Kiwi yen, we spoke about it before the market opened, and I see what happens with the Cymex Nikkei, which is on Bloomberg NH1. I honestly don't know what CKG's code for that is.
So that's the Singapore exchange is what we're looking at?
Yeah. So what that shows is that, so when the TOPIX opens, it just replicates the market price of the overnight market, right? But the NH1, which not many people watch it, but when the NH1 opened, NH1 captured the night market and then closed. It closed for an hour and opens it again. And then as soon as it opened, it just went down.
Well, I just want to get the symbol to type in from Stan.
Well, I can speak to Stan on Monday and we can discuss what.
Well, he'll get it to me later today. When he's
honestly, it's open. It went down 1%. So I just went, okay, well, the yen doesn't see. Ira knows this. When currencies don't like asset markets don't like currencies that get stronger.
Right.
So so when it did, it sat there like for 2.5 hours, and then when London opened, it just went boom. Now, of course, it can change, and if it does, you take it back. And then you get an edge, and the week is going on. So I think the next 6 weeks has been set up by this week.
I tend to agree with you. And then you have, and tomorrow's a GAN day too. So it's going to get interesting how this week. Yeah. And the only thing they're buying again is, guess what? Apple. And Tesla out of the box. I have to get authorized for that Singapore exchange. I'm not authorized for it. That's why I can't pull it up.
Andrew, I missed your comment on the currencies because I had to go get a cup of coffee and quiet the dogs.
My comment was, currencies don't, or more so asset markets. Look, the Nikkei will read any currency strength will not like a stock market, right? So if the yen's strengthening, the Nikkei will tell you before the yen is about to strengthen or vice versa. So when
look at the bank stocks this morning off the rally in the long end of the curve, right?
Yeah.
So you want me to write the headline right now? Yield curve's flat and not good for banks. So they'll start talking yield curve control, but it totally misses what the FOMC is. But you can see it is really amazing how much action you get on a daily basis. That's the power of the algorithms, though.
I guess what I was saying is last night when we had the setup and it was Tuesday, Wednesday, nonsense and dance and stuff. But I think it was a very interesting week and shaped. And you provided an immense insight to God. I think he kind of. I actually think what you said last night was immensely interesting because I think Powell said. Because if Powell had said, I'm going to do yield curve control, I think the US dollar would have gone to zero. It was just going too quickly for him.
That was what I was trying to clarify. Yes, I agree. That would have, and yet, because when you listen to the individual Fed speakers over the last month, I mean, there's been so much talk about yield curve, and it was not in a reticent fashion. I mean, yeah, it's there. We're not ready for it yet. But it seemed to be ahead in the queue before going to negative interest rates. And before I would have thought it was switched. But from the discussions all month, it's okay, yeah, we're not quite there yet. But one of the biggest promoters of it, of course, has been Lael Brainerd. So, and I think she's a more powerful voice than some others who are sitting there. I think that's, we'll keep harping on this far more than I am, but I think that Powell did walk it back in anticipation of that. It's like he's woken up to, hey, you know what, the gold, I always, speak of gold in terms of Volcker, which is that I know, that I factually know this, and I've made the case many times that he viewed gold as the enemy of all central bankers. But that's somebody who, if you read his works, has a far different sense of central banking. Oh, there's now a headline that comes, Steve Bannon charged with.
I just saw that. Wow.
I just saw this, yeah.
What's it charged with? It's 65.5 is the gap fill in the SPOOs.
Steve Bannon charged with fraud.
By the New York Attorney General. Let's see.
You mean the New York Attorney General who does political prosecutions?
Oh, you mean all the president's men are so clean?
No. It's kind of like Chicago. There's no, when I tell people how much corruption there is in Chicago, no, it's no worse anywhere else. I go, cut it out. First of all, when I hear about voter fraud and people are up in arms, I go, why is nobody in Chicago? The Kennedy-Nixon election was absolutely stolen in Cook County, Chicago. Absolutely. It's in the history books. Go check it out.
Yeah. Well, dead people have been voting here for a long time. And they vote more than once.
Trust me, when that ward came in and delivered the votes late and it was 100% for Kennedy, or I think they had to doctor it and make it only 85 or 90%, but they had done such a good job of.
Yeah.
Please, I'm incredulous. Does nobody ever read anything? And I'm speaking about reporters. I'm saying people spew crap out. Go bother to read instead of binge watch every.
But the irony is, if you allow me to be, we spoke about gold yen at the start of the week when we had an amazing breakout.
Yeah.
Right. And when I worked for Paul Jones at Tudor, the one thing he said to me, and the smartest thing he said, Andrew, you must, whatever you do, whatever process you apply, you must apply time with your trades. So if you want to be, gold goes up 100%, that's great, but you'd have a 50% stop. You might get it right, but you get stopped out on the way through if you don't have the right time frame. And that's why I think, you've always got to have the right time frame within your trade.
Yes.
And so at the start of the week, the setup is if we're getting this, I think gold will be, 300% higher in 2 years, but it might be down 25% in the next 6 weeks.
And Andrew, that's why I'm always a trader. It doesn't matter. You know what?
Exactly.
I could see a big picture, but that's Howie 101. If you're right
100%.
one time, you're friggin' wrong. And then it's a matter of
100%.
how much pain can you take? Because people forget the market's job is to make you the most uncomfortable in any trade you put on that it possibly can.
100%.
That's
But
the
I
market's
think,
job.
I think this week was a fascinating conversation because, I stepped in, stepped out, and you started the conversation on Monday with obviously Kiwi, but in the end, the edge became, if we get these closes on the week, and looking at them right now, I didn't think the
Gold
Aussie
yen,
would be.
or you were looking at the pit gold yen, right?
Yeah, the gold in, closing above the monthly chart, which look, it will get those objectives eventually,
Yeah,
Judd. It
I
will,
mean, for
but it may do it in 3 years' time. But again, when I was talking about the Aussie Kiwi at the start of the week and the negative rates, it made me go and I spent like half an hour today trying to do the real yield. I finally found it, real yield Kiwi versus yen, and I was, of course, right. I mean, owning a yen is much more powerful than owning a Kiwi at the moment. But you go and see what the Kiwi yen has done since March lows. It's rallied a shitload.
yeah,
A shitload. So if the risk off board's going on now, which it is kind of little bit, it's not a bad way to hedge your book, or just outright sell.
no, Andrew, that's and again, the market sometimes will focus on nominal yields, but Neil,
No, I love what you said this morning. I went away and did my homework. Don't worry. I still respect you, sir. Don't worry.
well, we'll try to our best to dissuade you of that view. But again, and I'm in a nominal yield mindset, right? I'm sorry, a real yield mindset. When it comes to real yield, the market focuses on the yen in nominal terms, and even in nominal terms, the yen is in a far different place than it was in a kingdom long ago. We're in a whole different genre of yields right now. It's a whole different, whole different.
Which is why gold is becoming, essentially, which is fascinating because gold's now, everyone's going to get really caught up with gold. They're going to buy it at 2,200 and sell it at 1,900.
Yeah.
I mean, just keep buying the matrix numbers that Judd sends out, I say, on the dip, because it'll end up higher, but never buy the top numbers because it just average in, average out sort of stuff. I believe because it'll end up higher because I think Angelo was saying it's over. They've gone beyond the piece.
Well, we've got a lot of really, to me, good indicators for the week. I'm watching Euro Yen, as I've said the other day, very carefully here, and the Swiss yen. You know what? And on a daily,
And don't forget the Kiwis. I know it's a sorry.
no, and you're right. I'm glad you threw in the Kiwi yen. Very important because the New Zealanders have told us
you're the one who told me first that they went negative rates on Monday.
Yeah, well, but as soon as they added, their meeting statement was very dovish. They talked about the currency and they added to the QE, which for a bank of that stature is interesting. But they're telling you how they want to keep the currency weak. But I have the Swiss yen chart up now, Judd, in cash.
Yeah, I got it up too.
Okay.
Am I on the right page with everybody? Yeah.
I have the daily up.
Yeah, that's what I got up.
Oh no, I'm sorry. I have the 240 minute up. Because I'm sorry.
Okay, I can do that.
I'd like to see it test down to
I'm here to learn like everyone else, but I stepped in yesterday and I'm still learning when, Mr. Harris goes, the fucking Swissy was, sorry, excuse me, Andrew. The Swissy was weaker. And I went, oh, God. And I saw a lot of gold for me at the 2000 level, because it was just a 618 retracement, which I think everyone knows that number.
Yeah, well, all those highs and all the currency spreads, Andrew, every single one of them said, don't be long the gold.
Once the Swissy, once Ira said the Swissy went, I wasn't watching this. You said it, or Ira said it, or someone said it. I was like, I didn't see it, and you can only see so much. So I'm not bashing myself up, but I'm going, oh, good idea. And then suddenly, boom. But the irony is, the yen started to strengthen and the gold stabilized, but everything else that was the hot number is starting to get hit.
Yeah, well, the other thing too, Andrew, is you want to watch these pit charts, and that's why I still keep up all the pit charts. And I had CQG, when they stopped the floor trading, they weren't putting in our pit data in the SPOOs, and that we need it for the long-term spread bar. So Stan got that all put back in for us.
I've never been a pit trader, so you need to educate me on that. I get lost in that language.
Well, it's just that the data goes back farther. It's a data set.
You're right.
So here's the pit gold, and Arco was asking about the gold the other day, and the pit gap, Phil, was 24 and a half.
Yeah, I'm looking at what you're doing. That's beautiful, Phil.
Yeah, and it's a stone cold high. So that's why I always go back to those. I don't look at anything but the pit charts to go back in the S&Ps and NASDAQ and everything else and try to find those gaps, because it gives you a big trading edge.
That's fantastic. Okay.
And after that supposed bull, let me say, less dovish FOMC minutes, now we got the 30-year making highs for the week. It's not inconsequential action, by the way, into everything that we're seeing. So that's the only reason I bring it up.
So can you explain to me what you think?
Well, because after it appears that Powell walked back in the minutes on the yield curve control, the long end of the curve did sell off yesterday, which the algorithms took and started buying dollars much more aggressively and selling the metals, even, after the minutes came out. Because, because they were reading that just like they read last week, higher long end yields, which to me is a false narrative at this juncture, because where yields are. But the sell-off which I talked about late yesterday afternoon, the sell-off in the 30-year and the ultra-long and the 10-year was really kind of insignificant relative to the way that I read that news. So here you are now. I'm using the 30-year right now. We've taken back all of that loss that came in the initial reading of the FOMC minutes, and we're higher.
Can I ask you a question on that?
You can ask me, yeah.
So well, firstly, when you explained the way they do the minutes, I found that fascinating. I think anyone in this conversation learned something that I've never learned in 35 years of doing this. That was fascinating to me. I don't think the bond market will just keep going down.
Wait, yields or
you're wrong. But if the currencies still go down, the bond market may stabilize, unless we are in a 1994 situation where everything just goes down, which I don't think that's going to happen.
Yeah, I don't think 1994, by the way.
Yeah, I agree with that. But the bond market can still stabilize, and the currencies can still go down, and the asset markets can still go down, and the bond market will stabilize in just a normal market situation. You know what I'm saying? That in essence, what I think what you said yesterday is very fascinating, and I think I'll get confirmation, yes or no, whether currencies close and maybe some of the stock markets close tomorrow night, Friday, whether the bond market goes up or down by 1 basis point or two. If the Aussie and the Kiwi and the Euro and the Swissy and vice versa, and the bond does nothing, but they do a massive reversal, that to me means the dollar's going to strengthen. He's dialed it back. He said, slow down, you buggers. Be careful. Asset markets will go through a correction.
Yeah, but again, I will let the market signals tell me. They're out there. Yeah, I mean, I can't look at the bonds as any signaling because the Fed, we just don't know between all the central banks when they're in, what they're doing, and the fact that they have everybody so off balance. Again, if you think that you're going to make a living being short the debt markets at this point in time, I think you're fooling yourself. You will eventually, when that eventually is, I don't know. But right now, it's like yesterday's a classic case. If you got short the 10s, the 30s, the ultra longs, even the 5s, you have not been rewarded in any way, shape, or form.
I'm strongly considering everyone. We spoke about this conversation yesterday afternoon. Kiwi yen and Aussie yen were 1.5% higher at the close of New York yesterday. They're now lower by 1.5%.
Yeah.
That's not really a board you want to own stock markets in.
And we're back to the usual suspects. They started out buying Apple. Then they went to Facebook. Then they went to Amazon, Google, Shopify, Autodesk, Tesla. They go to all the momentum names again, and they just bid them.
And I'm only getting to know the guys in the room at the moment. Penn and I think Angelo was saying yesterday, they dialed it back because they don't need the weapon now. They'll come back later, I think. I think that was what he was saying.
Yeah, and Randy, this is probably the nicest of the patterns.
All right, I'm going to stop on the global macro. I'm going to go walk the dogs and.
Yeah, will you walk me? Take me for a pish?
I remember the days somebody would put you on a leash and walk you, but.
Good.
Okay.
All right.
Again, this is I listen to this room. You don't hear any television in the background. I don't even have it on because whatever headlines will get out of here. And I think enough global macro to sink our teeth into, and we'll see the way but I'm watching this yen very carefully because my focus is on real yields. Let's stop being childish and always thinking in terms of nominal yields. Especially even in the emerging markets, those banks, as people are starting to wake up to, have really crushed their nominal yields too. So pay attention to real yields. They don't always matter, but when they start to matter, we do pay attention. And Andrew, are you still there?
Yeah, he's here.
When you were at Tudor, was Peter Borsch still there? He's not answering, but we'll get back to that later. All right.
33.65.5. We got that print, didn't we, in the spoons just now?
So I'm back with you. Sorry.
Yeah, you missed it by $1. They're going to go print it. 33.65.5 is the gap fill. Yeah, he was asking about Peter Borsch, if he was at Tudor when you were there.
Peter. Yeah. Peter was there. Yeah.
Now there was one smart dude, he came out of the New York Fed at one time. But I've known him a long time. But really a smart guy. I used to run into him when I lived in New York because he lived right across from the park on Central Park West. In one of the
Hey, Ira, I hear from Peter Borsch, by the way.
Oh, I'm sorry.
I hear from Peter Borsch.
Well, we
Very smart dude.
he is one smart guy, and
And a nice man too.
and he's running the Robin Hood, not the trading company, but the charitable organization.
Yeah, the
Yeah.
one that Paul started, yeah.
Yeah, good. Now there's a good bloke, as we'd say in Australia.
Yeah. Good bloke or good and a mate.
Yeah, Alexandra, when you next time you chat with him, because I don't. Every once in a while, I'll send him something. But
It's the sad thing I think about this because I just joined this room, but I don't even know, which is actually part of the world. I mean, we all used to travel everywhere. Go to Chicago, go to New York, go to Sydney, whatever. But now, I don't. My foreseeable future, we don't do that now.
Well, Penn sent me a thing that Qantas just shut down international travel in 2021.
Andrew, you're not going anywhere, unfortunately. Qantas doesn't love you guys anymore.
Well, I mean, I'm talking more as a.
I'm
community.
joking.
I know. Yeah, sorry, Penn. I mean, yes, because
if he was a true Aussie, Alexandra, he would swim.
Yeah, he would either swim or he would get in a boat and single-hand it.
I'm a long way away, as you know.
You know what, Andrew? We really hope everything works out, but I actually think it's really smart of Qantas. The only thing is, I think what I read, if I remember, Judd, didn't they say they were going to be down like 90%?
Yeah, 91% they were going to be down.
That is like gobsmacking, like beyond gobsmacking.
In terms of their revenue.
Yeah.
Yeah, but I mean, they're underwritten by the government. Doesn't matter. They'll survive, and most of the planes are parked in hot places somewhere. Like, I mean, it's look. I guess what I'm saying is that it's the community, it's the ability to meet with people like yourselves, smart, sharp, and just translate different ideas and challenge your own biases. This is why this room is amazing, but the challenge is also that you can't meet and greet.
Yeah, it's brutal.
Well, I'll tell you the truth, Andrew. Last night, I was completely depressed because normally I feel like, it's not that I have a handle on the market, but it's just, I feel comfortable. And I have to say, last night, I just literally said to some friends, I think I've had it with the market. I'm out of here for the next couple of weeks until that Apple splits, because all they want to do is keep that Apple price up.
337
and it's just
calls.
it's annoying.
August 21st.
So, and I really honestly, yesterday,
22
I had
contracts.
no effing idea what to do. I can read a chart, but I'm like, I don't know what to do here. So when I don't know what to do, I'll do nothing.
Well, again, I think it, again makes what Judd is doing more valuable, because it's not just, look, the markets, as you know, Penn and Ira and Judd, no, I don't, I know a few other names in the room, only in recent weeks, but, it's a community, it's a difficult game, you got to, but the intellectual simulation is profound, and the community is even more profound. So, all cheers to Judd, I say.
Well,
I totally agree. Judd is really, he keeps his shit together for sure. I don't have my shit together, I can tell you that. But
Well, if anyone's not feeling good, then just, swim to Sydney and I've got a room for you.
and quite frankly, I never feel this way. So, something's telling me something is going on, but I don't know what it is.
I think it's happening in every family in the world, and I think Ira said before, we have a saying in Australia: you look after your mates. So let's look after our mates.
Yeah, I guess I'm not really talking about the pandemic. I'm really feeling the market kind of thing.
Already, you think the market's changed?
I don't know what's going on. I mean, I guess because nothing makes sense to me anymore.
Well, it's just money, Penn. It's just capital flow. You got to keep trying to make sense of it and just say, okay, it's just there's so much money, it's a capital flow trade. And
Yeah.
you just take it, for what it is. It's a capital flow trade. We started out, was the first thing I said this morning. They're coming for Apple. Randy got on video, which is probably as good a setup as Apple this morning. They bought Netflix. Then, you pointed out Amazon. They flushed everybody through 32 and a half. And once they brought that up, that's gone. And now you have these, it's the same game all the time. They give you these Wednesday, Thursday gap lowers. Is that the high for the next few weeks? Or is this just a midweek shuffle low? And okay, so from the opening range trade, all it is a midweek shuffle low, and we're going the other way again in the OpEx. And everybody's going to press the shit out of this stuff. So it's only a matter of what you're on and managing your risk, and stay away from most of the other names, because you just don't need to be involved. There's only a few names to be involved in.
Yeah, no, that's great advice. I can tell you, Jed, I almost rang you last night because I was like, my head was exploding.
Yeah. So can I ask you a question, Pen?
Yes.
So your background is in equity trading or running?
I came I worked at Goldman Sachs in M&A. So that's where I started my career after selling a company in my 20s. I just decided all the boys were making all the money. So I said, why am I, I'm glad I sold my publishing company. But so it was, in my 20s. And I guess I decided to go to Wall Street, got a little lucky, ended up at Goldman, or I got my MBA, went to Goldman. And then after a year, a guy who was working there is this guy, Richard Perry, who started Perry Capital. I left, he was co-running the largest risk arb desk. And so he asked me to join him and start a hedge fund, which I did. So I did that for a long time. And then I started my own shop about 25 years ago with my husband, who I met in business. And on a deal, actually. He didn't get the deal, but he got the girl. And that's my background. And so basically what I do is I manage the assets of the firm that really there's no outside money. I mean, I manage a little money for some friends, but that's about it.
So your frustration is that the market's insane in terms of the asset prices, et cetera, like most of us think that way.
Yeah, I mean, I guess you know what it is, Andrew, and thanks for asking. I really just kind of, I suppose I feel frustrated, and I really need to nip it in the bud, because that frustration has kind of been building the last week. And by the way, guys, I'm not trying to be like, hello, I need a shrink or whatever. It's not that.
No, before you go, I made a lot of money in March and April, and I go half of it back in the next 2 months, so don't worry about it. I mean, it's just freaking trading, and the truth it is. But please continue, Pen.
No, we just have, it's just like, it's pork bellies. It doesn't matter what it is, if you understand how the little beasts run or not. It's all the same.
Yeah.
And actually, the stocks are easier to trade than everything else. I mean, Ira and Andrew trade the currencies, and to me, and I grew up trading the currencies. They're the hardest thing in the world, because it's not only do you have to trade you're looking at the currencies and the individual dollars, you have to look at the crosses, you have to look at the interest rate differentials, and there's a hell of a lot more going into it than everybody's just buying or selling something.
You used to look at it, but sorry, Pen, please finish.
No. I guess, I guess I never feel this way is really the bigger issue. So like, to me, when I'm not, it's not, and by the way, I'm not trying to be some sort of crybaby. I'm just sharing in the sense of, I don't ever feel like this. Like, I always feel like I can, listen, I don't need to be in a trade every day. That's for sure. I don't like forcing trades. And that's what I feel like I've been doing. And I don't know why. Well, like, it's a market thing, because usually, I know my levels. I can read a chart. I'm pretty, I think I'm technically, but I'm just, and maybe to tell you the truth, it's probably a bit psychological because, sorry, Peter, hold your ears, but I hate Trump. And so it does get in my head. And so I really need to compartmentalize, which I usually can. And so maybe that's it. Now that I'm talking to you about it, maybe that's it.
Well, none of us are getting the head breaks that we normally get.
Very, very valuable. And I mean, I was similar. I kind of came out of March, April, thinking I was the best trader in the world, and then it went to the next 6 weeks. I was like, I can't trade again. And sometimes you get into a rhythm, and even this week was interesting because when Ira started on Monday about the Aussie Kiwi, this may not materialize into the theme we were talking about, but confidence, as we know, is powerful in trading if you have a disciplined process. If you don't have a process or discipline, you're smoked, as we know in this game. But I hear you, and I share your themes because it's but I also think the madness of the market also gives opportunities.
Yeah, I think, and Peter, I think that's true. Economy versus the market, but I know these things can be disconnected, and obviously the Fed is doing its thing. So, in a certain sense, we've become Japan at the end of the day. That's where we're at. We've been Japanified. But I'm not trying to and sorry, by the way, don't mean to distract from everything, but just, I don't know how everybody else is feeling. I'd love to, and it's just a pulse thing. For me, when I can't make sense of something else is going on. And it's not about, I don't have any, thank God, I don't have any sort of financial issues or, it's nothing like that. It's nothing personal. It's something to do with the market. It's work related. So, and maybe it's, Trump is getting in my head a little bit. Maybe I'm nervous about that stuff. I want to trade well, like yesterday. In fact, I've spoke to this hedge fund buddy of mine who taught me what I know, sort of how to trade. And he said to me, "Hey, Penn, well, you knew that, it was going to be a whipsaw yesterday. The market telegraphed it." He was completely right. Like, where was I? Had my head up my ass.
Well, Penn, it's just, sometimes you just got to walk away. I mean, I haven't walked away in a long time. I'm having a hard time seeing things.
Well, Judd, that's exactly it. I can't see things. I'm looking at the chart and I'm saying to myself, you read different road signs, market road signs. And I'm just like, I don't know what's going on, because I see divergences and they don't work out. Then something gets a bear flag, doesn't work out. We haven't corrected, we need to correct it. And I firmly believe one of the things that I do think, I just had this conversation with Porter, I think the problem with the market, and it's probably for me, is because they will not let Apple go until the split.
Look,
And I think that's what
now the screen's your enemy, okay?
Yeah.
You're going to get a couple of really good trades in the morning. You just got a nice capital flow trade again off the opening. And a lot of these names, the spoos came up for a gap fill. You were expecting at least half of the gap. You got the full gap fill. You got to rally back up in tech. And now, whether it follows through or it doesn't follow through, the easy money's done. And you just got to walk away from the screen now for a couple hours every day, or all of a sudden it becomes numbers and everything's just going up and down. And you got to give your head a break to clear out and reflect on what it is that you're seeing.
Yeah, I think that's really good advice. And I think that's what's going on.
Ira runs, he turns it off. I've been starting to walk away for months, for 6 months, almost 9 months. You couldn't walk away from the screen for almost 6 to 9 months because of the volatility.
And Judd, by the way, I think I had this conversation with Peter. Net, for me, there's a market playbook, and that playbook is always the playbook. Like so many people, like my little guy who turned $438 into $24,000 from March until June. And it's because he followed the playbook. And I'm thinking to myself, hello, I need to step away and review my own kind of rules and the way that I look at the market. Because at the end of the day, for me, it's the 10, the 50, 200 SMA, you know, a couple of other things, but the MACD. And particularly, like I say to people back in February, okay, once they got done, you know, with the market, once the market gets under the 200-day, that's the next price. That is the next price it has to go to. There is no other price. So for people who listened, I have guys who made lots of money because they just followed, you know, you have to have discipline. And I suppose right now for me, what I'm feeling is, I don't know, I'm just feeling out of sorts, but I think you're right. I think you and Andrew hit the nail on the head. So maybe I just need to, like, you know, back off until Apple splits, end of the story, go to the beach.
I mean, the opportunities are every single day. It's just been early now. And you gotta, after London goes out, you gotta let it go. Trade when you gotta trade when the highest volume of the day is there now. And you have to trade the capital flow when everybody wants to push money. When the algos are going one way, you can go with the algo flow and you can trade it and you can make money. And then, you know, if you're, you know, unless you're in these names from a lot lower, and a lot of people are, I mean, they don't care. They're not, you know, they're not getting out of any of this stuff. I mean, you said it the other day when we had that big buy in Apple at 458, or where it was 458, wasn't it?
Not sure, maybe.
Yeah, it was like in the dark pool. Somebody bought almost $1 billion worth of Apple.
Oh, right.
Yeah, okay, and they threw it in their face for $10, and you know, and now it's, you know, it's up and going their way. So it's just when you see somebody of that size going in, and they don't care where they get them on because they have to have them on, you know, you're going to get your opportunity on that and play with the names. All you can do is trade the names that are in play, and Amazon, Target, you know, names like this. I mean, that's where all the retail is in the world. You might as well trade it.
Yeah, no, you're totally
There's nothing else.
Yeah, I mean, you know, I guess, you know, again, I think it's just, I probably need a break.
Yeah, just, you know, go for a walk on the beach.
Thank you. Thanks, guys. Sorry to take up the air in the room, excuse me. And thanks, I appreciate it. Andrew, Judd, everybody. You guys are the best.
No, all good. And